you are trading Forex because you want to achieve that financial independence. Okay, and the rest of the stuff will come ultimately naturally. This is what I want you to understand. Just spend some minutes for yourself to understand what is it that you are really aiming to achieve in Forex market. Not only in Forex market, but overall in financial markets. And when do you want to achieve it? That's the key question and key driver for yourself to understand how you're going to be doing it. Once you have done it, move to the next point, how you're going to be doing it. And I believe and I hope that Fibonacci is going to be the key for you. When I started Forex trading back in 2005, I was only 16 years old that time, 16, 17 years old. I was a little lucky because I ended up with staying someone that was a pro trader for a major investor bank. Okay, and that changed my life because that one person did show me the key about Forex market. Not only Forex market, but overall financial markets. And he did share some of the insights. So that was the kickstarter for me. Coming from kind of like a thrown back background where I was coming from a third world country that time. And I spoke English, but I was not fluent in English. And I was 16 years old kid that time. Never thought that I could even travel across the ocean to the US, yet alone in the next 2 weeks I'm traveling to the States, this time to Wall Street and UCLA to share and give training to the Americans myself. So why I'm sharing this information with you? You should clarify your goals, and your goal should not be become rich in one day, or in a week, or in a month. It took me 6 years to make my first 7-digit profit. And I would like you to make such goal, a long-term goal, that you will be making that big profit, but be realistic. Nobody makes $1 million in a week or in a month. That's just not realistic. It is fake. It's lying to yourself. That being said, I want to bring the risk disclaimer for your information. As much as it sounds amazing, great, that you can make huge amount of money in Forex trading, I want to bring you back to world that it is heavily risky as well. Anything that has leverage involved involves high risk. So therefore, you should never invest the money that you cannot afford losing. This is the golden rule of Forex trading. This is the golden rule of financial markets overall. So focus on it and act accordingly. Now, let's go ahead and start what we are going to be looking at today and see what are the opportunities for us to get from the market in the coming days. This is, by the way, euro dollar. We drew the Fibonacci. At the moment, on weekly time frame, when we are looking at, we can see that the pair has broken below the 161.8% Fibonacci retracement zone, which was this previous support that we were anticipating, and now it is on a bearish run. Where is the target? That's the key question for us. From the overall market analysis point of view, we can see that price action could sometimes give us a fake break below. So as long as this move has not gone below the 1.0580 zone, which was the overall support zone, we are not confirming the bearishness of the market to be continuous. I repeat again, the market is on bearish bias, but I cannot confirm the bearish continuation because of the fact that we have seen a price action. To be more precise, we have a candlestick formation over here where it signals as possible reversal, let's put it that way. And overall, the market hasn't really gone on weekly time frame and make a bigger bearish continuation formation. So from that point of view, this is not really Fibonacci, but it is not on confirmed bearish continuation at the moment. So if you are going to be aiming to sell the euro dollar, your aim should be to sell below the 1.0585 level, which is the pretty much the lowest low of yesterday's low. And if you want to buy, I don't recommend it yet. However, you can consider buy opportunities once we have a higher high confirmed. Where do we have the higher high? It is just above the highest high of the 19th of November, which is at the level of 1.0763. So if we see the market going above the 1.0763, you can consider entering a long-term bullish entries, especially the expedited meeting that the Fed had yesterday confirms one major thing. The Fed is not really, well, the Fed is not just focusing on the rate hike. The Fed has a bigger problem right now, and that's the audit proposals set by the US government, that they want the Fed to be as much transparent as possible. So you can read more about it on my colleague Ma's article from yesterday. He shared a nice interactive commentary where you should go ahead and read what's the hidden agenda of the Fed. So if you can manage to read it and understand the Jeffries rule, etc. involved, you can see that there is a possibility that the Fed will not be hiking the interest rate in December, because according to the Congress proposal, for the Fed to be able to hike their interest rate, they need to have a confirmation from the inflation data. And unless the inflation data is rising by over a percentage, they can only then start hiking the interest rate. And what is it related to inflation that you can, I hope, wander around? It is the oil prices. So as long as the oil prices are not making a crazy high, we cannot expect to see bigger inflation data announcements, nor we can expect to see the US Fed hiking the interest rate. This is my personal opinion, of course. So from Fibonacci point of view, we will be aiming to sell below the 1.0585 level, and we will be, of course, aiming to buy above the 1.0765 level. So these are the targets that we have. On hourly time frame, let me go back, we can see that the pair has entered within two moving averages, 250 moving average, and that is for me a sandwich, I call it, because whenever it happens, the pair tends to go up and down consolidation mode. But I also shared my analysis earlier on my Skype group saying that once we see the break above the 1.0650-55 level, we are expected to see a continuation of the bullishness. So we have seen a break above it, although it was kind of a fake break above, but nonetheless we have it. So I'm looking right now the continuation of the bearishness, as the first target being at the 1.0697 from the current level, and continued towards 1.0760, and afterwards, if that level continues, we will be seeing the pair rising to 1.1023. Meanwhile, if we see the pair making another low and go below the 1.0620 level, this is intraday analysis, not swing, we can then aim for the pair to go to 1.05 level in the coming couple of days. So it's very substantial level for us to check for the euro dollar at the moment. One more thing that I want you to understand and have a look at it is the MACD. MACD is moving averages convergence divergence. It has gone above the zero line on hourly time frame. Each time it goes above the zero line, as an example over here, afterwards we see approximately 100 pips of bullish movement. So let's have a look at it. Another one over here, gone above the zero line, we see 50-55 pips. Let's check another opportunity over here, above the zero line, afterwards again 80 pips or so. So it is important for you to notice that the MACD is above the zero line. Nonetheless, I'm expecting at least 50 pips upwards move, which is limited at 161.8 Fibonacci retracement zone at 1.07 level, more or less. So if you have any other question about euro dollar, feel free to type on the chat section. Meanwhile, I'm going to jump on to pound dollar. I'll drop it into the same chart so that we can easily look at it. I'll again go on a weekly time frame, trying to put the correct Fibonacci retracement zone, and I think this is the right wave that we have. Indeed it is. So we can see that the pair, let me go on daily time frame so that we can see it better. We can see that last week we had the pair rising from 150% Fibonacci retracement zone to 100% Fibonacci retracement zone, and from there on it has been collapsing. So what is it signaling for us? Since we didn't have a higher high, and indeed we had a low, as an example over here, let me highlight it for us. We had a high, we had a low, and then we had another high which was lower than the previous one. Then we had another low over here at 150%, which was lower than the previous low, and the current high is also lower than the previous high. So the price action overall is signaling bearish movement. So from the Fibonacci analysis perspective as well, we can see that the next target, as we had the 100% Fibonacci retracement zone acting as a strong resistance level, our next target remains, of course, immediately at 1.5040 zone, and afterwards, if that level is broken, which is likely to be broken and give a fake breakout, we can expect the pair to move to 161.8% at 1.4980 level. That would be the target for the sellers. So let's look at it also on hourly time frame to see how is the pair really moving. We can see that on hourly time frame as well, the direction of the trend is pretty clear, pretty straightforward, and the target is staying just to the point. So I think the level or the analysis is pretty accurate, and we can aim, of course, 1.50 level immediately overall, which is psychological support zone, and it's only 70 pips from where we are right now. So try to avoid buying pound, and if you're selling it, you can hold on to your sales entries. In the meantime, I don't really recommend any extra entries at the moment, because the momentum is not really at the right level at this given moment. The best sales entry for today was at 1.51, and from there on we have already gone more or less 30-35 pips downwards. So this is for the pound dollar. Now I'm gonna be going for USD Canadian dollar. On USD Canadian dollar, of course, let's go on a weekly time frame, and let's delete all the extra levels. For USD Canadian dollar, if you remember from last week, I did mention that it is not recommended to sell, because many of you were asking where to sell, where to sell, where to sell. And if you remember, we discussed that the 100% Fibonacci retracement zone is going to be our target. So at this given moment, for yesterday's figures, we missed the USD Canadian dollar target by just 20 pips compared to the last week's levels. And from there, we have seen the pair gone below the 88% Fibonacci retracement zone. And at the moment, the targets are still bullish, but I would not enter long anymore because the pair is very close to 1.35 psychological resistance level, which is also marking it as a double top confirmation. Pattern is a reversal pattern, price action pattern, where each time it happens, you would expect the pair to reverse backwards. So I don't really recommend you selling the pair right now. If you want to sell, your best level would be at 1.5120 zone, sorry, 1.3520 zone, which is 110% Fibonacci retracement zone, and your target should be at 1.3070 level, which is very close to 1.30 psychological support zone as well. So on hourly time frame, though, we have a little different view. If we look at it, we can see that on hourly time frame, the pair tried to break below the 50-hour moving average. This is the 50-hour moving average, the red moving average. But then it started to reverse backwards. So if we would see the possibility of the pair going below the 1.3340 zone on hourly time frame, or to be on a secure side 1.3339 level, we would be expecting the bearish power to get strengthened. And if you are using 60-65 pips of stop loss, you can aim to have approximately 100 pips of take profit on this given pair. So we would be aiming to enter at the level of 1.3339 level with a target towards 1.3250 zone. This would be for the USD Canadian dollar. Our final analysis for today is going to be on, let's see which pair we should choose. Let's take a look at actually oil to see what's really happening on oil. So looking at the oil chart, we can see a good wave over here. 1, 2, 3, 4, 5, 6, 7, 8. So this is the very good Fibonacci wave. So we can see that, or you can actually try to understand why I was calling everyone not to sell below the 40 zone for the oil. It's because of the fact that we had the 100% Fibonacci retracement zone at 39.86 level. And from here onwards, I don't expect really bearishness, especially if we see the black gold oil breaking above the 42.80 zone. If that level is broken above, my target immediately is going to be shifted to 45 level. And if that level is broken also, I'm going to be aiming for 47.40 level, which is going to be my take profit level. Meanwhile, my major bullish target stays at 38.2% Fibonacci retracement zone, which is at $52.10 per barrel. This is it so far. Today's webinar analysis was brought to you by A to Z Forex in association with Trade 360. You can go ahead also and go to trade360.com, register yourself an account for the crowd trading, and get the insights of the crowd as well. What I personally do about the Trade 360 account is that I love seeing what the crowd does. As an example, if I see the crowd is buying oil 80%, meaning 80% of the people are buying and 20% are selling, guess what I will do? I will sell. because remember one thing, 95% of the traders are loss-making traders. So if majority is doing something, it means they are doing wrong. The minority will win. Okay, it doesn't mean that if everyone is going to jump off the bridge, it doesn't really mean that you should jump off the bridge. Okay, and in the meantime, if you open yourself an account at Trade 360, you can also claim your $50 phone verification bonus and try to test it with a live account rather than just a demo account. That's it so far for today. Thank you very much. If you have any question, it's your time for the questions and answers now.